Good afternoon, ladies and gentlemen, and welcome to the Onthemarket Plc investor presentation for the full year results of the 31st of January 21. Throughout this presentation, investors will be in listen-only mode. Questions are encouraged, can be submitted at any time via the Q&A tab situated on the right-hand corner of your screen. Simply type in your question and press send. The company may not be in a position to answer every question received during the meeting itself. However, the company review all questions submitted today and publish responses where it's appropriate to do so. These will be available via Investor Meet Company dashboard, and you'll be notified once they're ready for your review. I'd also like to remind you that this presentation is being recorded. Before we begin, we'd like to submit the following poll. I'd now like to hand you over to Jason Tebb, CEO, and Clive Beattie, CFO of Onthemarket Plc. Good afternoon.
Good afternoon, Paul. Thanks very much for the introduction. Good afternoon, ladies and gentlemen. Thanks so much for your time. Very much appreciated. And we're going to talk about Onthemarket Plc and our full year results to 31st of January 2021 and some insights into the year just gone and also some insights into our strategy for the future. I'm Jason Tebb, I'm the Chief Executive Officer, and I have alongside me Clive Beattie, the Chief Financial Officer, who will be presenting to you today. So what is Onthemarket? Onthemarket is a leading UK property portal that is majority owned by estate and letting agents. We came to the market in 2018 to the AIM market. Originally, the business launched in 2015, but came to AIM in 2018. And what do? We are a property portal, which is essentially a phrase for a property marketplace where buyers, sellers, tenants, and landlords look for properties. And our estate agents, our letting agents, and our house builders advertise those properties for sale or for let. And then buyers and tenants look for those properties. And we encourage the interaction between the buyer, the tenant, and the agent. It's a sizable market and there's significant opportunity still. We are in a position where we've gained considerable traction over the last few years, but there is still more opportunity. There is estimated to be just over 18,000 estate agency branches in the UK. And even though we are in what we all know on this presentation as record sales transaction numbers, even after those high levels that we're seeing at the moment, the residential transaction market averages out at more than just over 1 million transactions every year. And there's somewhere between 2 and 2.5 million private lettings annually. So significant opportunity in this marketplace. And we've grown considerably in that time and achieved significant scale. And we've proven that we are much more than just a challenger brand. We are much more than that now and established our scale, and we are continuing to grow both in our annual website visits, which have grown exponentially year on year. Our number of advertisers is growing, and crucially, we have estate agency branches who are on what we would class as paying contracts rather than free or heavily discounted contracts has increased. And that's a key indicator for us because it shows that our customers, who are our estate agents, letting agents, and house builders, have continued to increasing faith and awareness in our brand. And absolutely, we're in a point now where we have 93% who are under those paying contracts, which shows that they have some real value in the service that we're offering. And that value has continued to grow throughout the years that we've been operating, and we've seen consistent increase in our consumer traffic and consumer awareness as well. Our consumer awareness is up 10% year on year, for example. Our monthly visits from when we launched on the AIM market in 18, as I said, to March 21 has increased almost 400%. And crucially, as a key metric for our customers, our estate agents, letting agents, and house builders, our average leads per advertiser, which is also known as an ALPA. You may see that in the presentation later, but our average leads per advertiser has increased year on year. So some really good, solid numbers, and we are continuing to grow and develop. How does the model work? Well, it's very simple. We operate a subscription model, and that would mean our estate agents, letting agents, and house builders pay a monthly subscription in order to be able to list all of their properties onto the site. There are a couple of other revenue opportunities, such as featured properties, banner advertising, and to our new homes developers, the selling of email marketing campaigns to support them for potential new build customers. So that's a brief summary and overview. I'll now hand over to Clive, who will go through the financial and operational highlights.
Thank you, Jason, and good evening, everyone. I'll start with a few of the headlines and then go into a bit more detail. Revenues for the year to January 21 were up 22%, and actually what we think is a very strong performance because, of course, this period covered the COVID period and all the implications of that. At the same time, because of COVID, we took various actions to reduce our own costs, conserve our cash, and the sum of the revenue growth and the cost action has led to a profitable year for us, our first profitable year. Adjusted operating profit, you can see here, was 2.4 million, and fully diluted earnings per share at 3.42 pence per share. Those actions that we took were successful in conserving cash. We finished at 31st January 21 with 10.7 million of cash. That was up from 8.7 million a year earlier. And perhaps particularly pleasing for us was the first meaningful contribution from our new homes business. That business only launched in September 2019, but the year to January 21 contributed 1.5 million of revenue. And that's certainly an area we've got good hopes for going forward. And finally, ARPA. ARPA, for those who are new to this, is average revenue per advertiser, and it's given as a monthly figure. So effectively, our ARPA of 142 would mean the average advertiser was paying £142 per month to list on our site, and that was up 16%. What you're seeing with our ARPA is it is kept low in this period because going into the financial year, we still had many agency branches on free contracts, free introductory contracts, which we introduced to grow the scale of the portal after our admission to AIM. And although we had planned to start converting those to paying with COVID and the onset of COVID, that process was deferred until quite late in the year. So actually the ARPA is lowered by the fact that we have, for quite a long period of the year, quite a few agents still on free of charge contracts. If I then turn to some of the operational metrics, you can see that the average advertisers listed was up 4% from the previous financial year. But actually behind that, if you look at year-end advertisers, you do see the implications of that process that started Q3, Q4 to remove people who were on free of charge contracts and weren't willing to move to a paying contract. So actually within our agency branches, those were down from 12,470 at 31st Jan 20 to 10,645. And that was offset though by the strong growth in our new homes, where we saw developments up from 894 in the previous year end to 2,042. So actually our total advertisers at year end were marginally down, but still very strong at just under 12,700. But it was a combination of moving to paying contracts for the agency branches who had been on long-term freeze, losing a few of them on the way, but offset by the very strong growth in our new homes business. If I turn to consumers, visits for us were up 13% in the year to 267 million, and our leads were up 22% to 117 per advertiser per month. But both of those were affected by COVID, because the first half of the year and the period March to May, when the agency markets were closed completely in 2020, saw a drop in traffic and a drop in leads for obvious reasons. So actually, if we look at the second half of the year, both those metrics were up strongly, half two on half two, over 30%. We had 150 million visits in the second half, so 300 million on an annualized basis. And we were averaging 130 leads per advertiser per month for the second half. Finally, one of the things we also did because of COVID was really put a hold and a pause on some of our strategic initiatives. But late in the year, we did start pursuing those once more. And one in particular we've touched on here, the AVM, which is an automated valuation model. What that would mean is, as a consumer, if you go onto onthemarket.com, you'll see a tab where you can click on and it says value my home, and you put in a little bit of information about your house and it will give you an indicative valuation. But it will also suggest a list of local agents that you could then contact to come and give you a full professional valuation of the property. And that's proved very popular with both the consumers, but also by our agent customers in putting people in touch and helping them to start the house move process. If I then dig into the revenues a little bit more, I've said we were up 22% to 23 million. What that hides is that we actually gave direct discounts to our full tariff customers, and those totaled 2.6 million in the year. So actually, had it not been for those, we would have been a pro forma revenue increase of 36%. So a very strong performance, I think. The increase, though, what I'd really like to highlight here, and Jason touched on it, is the increase it's in the middle there, the agency advertisers underpaying contracts. This again reflects the move to ask people on free contracts to go on to paying contracts or to leave the portal. And you can see most of our agency branches at the year end were underpaying contracts. There'll always be a few that are on freeze, not long-term free as we did in the past, but short-term introductory trials before hopefully signing up as paying customers. So it'll never be 100%, but certainly we think it's only fair for the majority of our customers who are paying that they don't any longer subsidize people who are getting the same benefits but on long-term free contracts. Clearly that isn't equitable for anyone. So those are the key things there. Just finally, to summarize, what did we do because of COVID, the actions we took, for those of you who aren't aware? Well, our first priority was for the safety and well-being of our staff, and then to support our customers. I've mentioned we gave customers the discounts of 2.6 million. We were actually the first of the portals to give an unconditional support in that way to our customers. We also protected our own jobs and staff jobs and our cash position. Two ways we've done that. One is in reducing costs in marketing. The operational metrics I touched on before, actually we think are even stronger because our marketing in the year, and particularly in those middle months when the COVID was at its worst in terms of the lockdown restrictions, our marketing for the year fell from 12 million to 5.9 million. So obviously a significant fall, and yet nonetheless, very strong engagement with consumers who are active in the property markets, feeding through to our visits and leads. In terms of the staff, we did use the furlough scheme. We had some of our team on furlough from April through to about mid-October. Undoubtedly, that did what it was supposed to do in, I think, saving many jobs and reducing redundancies. But actually, as we've come out of the year, having firstly demonstrated, I think, a very good ability to manage our costs against our revenue growth, having started the financial year 22 trading in line with our expectations, and with a strong balance sheet with a 10.7 million of cash at the year end, we've actually repaid in full the grants we received under CJRS, which totaled 449,000. And again, we think that's the right thing to do in hindsight. They helped us protect jobs in the short term, but actually as we've come out of it in a relatively strong position, we think as a good corporate citizen, it was right to pay that back, and we've done that now. And so with that as a summary, I'll pass back to Jason to talk through some of our future initiatives.
Great, thank you, Clive. So as we've seen from both the metrics from a consumer perspective in terms of our traction that we're gaining and the metrics from our financial position, we are in a great place. And this presents us with a very good opportunity for our future. We're now well established as one of the 3 major UK property portals, and our growing brand awareness and the inherent support of our estate agent customers, combined with our highly competitive price point, means that we're now in a really, really strong position to grow. And we have proven that the core part of the business, which is the property listing service, the portal, is both sustainable and continuing to grow. And now we have an opportunity to develop a really clear strategy for innovation and to differentiate our offering for both consumers and for our estate agents too. So our vision essentially for the future is this: as a property technology company who provides services for agents, house builders and consumers, which features best-in-class products and platforms across the entire property marketplace. What does that mean? Well, it means that we will move from being a very well-established and growing portal service to becoming more than just a portal. Crucially, everything will flow from the core element of the business. So as Clive's already said, this element of the business, the portal, the advertising listing service element, has continued to grow, is sustainable, and is growing even in very tough times, both macroeconomically and due to the COVID-related issues. So we've proven that that model is both viable and growing. But now we're looking to extend our strategy into 4 core pillars. The first pillar, as I've said, is the portal, which is where everything will flow from at onthemarket.com. Secondly is software. And we were delighted a couple of weeks ago to announce our acquisition of Glanty, which is a software platform. And I'll be going into more detail on that shortly. The third pillar is data and market intelligence. This has come from both customer and consumer feedback, and our estate agents and house builders are telling us very clearly that they are looking for ever increasing levels of data, more information to help them win more instructions, to help them grow their businesses, and to help them engage with customers and potential customers of the future. On the flip side, there is very much a movement towards more information being provided to consumers, those who are looking to buy and to let a property. And we can see even from at government level, they've set up a number of working groups. The MHCLG, of which I am a member of one of the working parties, is very much focused on opening up the channels and transparency in the property market, encouraging transactions, reducing fallout rates, and reducing transaction times to exchange. And so we believe as a portal, we have both an obligation and an opportunity to be able to serve more information, more data and market intelligence to customers and our consumers alike. And the fourth pillar are communications and marketing tools. Who would have thought, if I were having this chat a couple of years ago, that it would be the norm now for a buyer or a tenant to engage with their agents and have a first viewing of a property virtually? I certainly couldn't have called it, and I don't think many people would have done. But the way consumers are now interacting with agents is changing, and I believe it has changed forever. And increasingly, consumers are feeling much more comfortable engaging in virtual spaces as they are in physical. And the fourth pillar, which is communications and marketing tools, will focus on encouraging those engagements between agents and consumer in the virtual space, as well as, of course, in the traditional space. So how will we achieve that and execute this strategy over these four pillars? The first thing we're doing, and we've already done to a certain extent, is engage with the customers and engage with the consumers. The second thing we have done is with the acquisition of Glanty, and I'll explain shortly how their platforms work within that flow. The third thing is through commercial partnerships, integrations with businesses in this space who can offer increasing levels of product, service, and functionality to our customers. The fourth is, as Clive alluded to earlier, one of our core growth areas is always developing the website and making sure that our functionality of the website is continuing to develop and increase value for our agents and increase differentiation for our consumers. And the fifth is in our sizable opportunity in the as yet huge potential but untapped comparatively new homes market. We've grown considerably in the short time we've been investing in new homes since late 2019, but there's considerable more growth to come. So let's move on to the first element. We have been listening and engaging with our customers and consumers. In my first 100 days in charge of the business, when I started in December 14th, one of the first things I wanted to do was engage with our estate agents. And we set up a series of virtual town halls. And over that time, we have spoken to literally hundreds and hundreds of agents. Why have I done that? I've done that because I think it's fundamentally important to speak to the customer and understand from them what they want and need. But also in this industry, and I can talk very openly about this because I was an estate agent for 17 years before I moved into a different sector, I feel I'm comfortable in talking to them. I talk their language, I understand their needs and wants, I understand how their businesses run, and I understand their challenges. And we engaged on this tour to really understand their needs. And I asked three very simple questions each time. What do you need from us? How can we do better? And what other services can we provide? And the response was overwhelming and overwhelmingly supportive, both from agents who I'd known through my internal network, but mostly from agents I'd never met before in other areas of the country. And the responses were fantastic. They engaged with us. They gave us lots of ideas. And to some extent, some of the strategy that we've implemented has come from a combination of our ideas and theirs too, which I think is the core to where our strategy will help us to deliver in the future. And we were very encouraged to get the positive feedback that we did. Just alongside this, we have just over 700 agents that only use onthemarket.com exclusively. They don't make any other portal choices. They don't advertise on any other portals at all. And we believe now is the time, and the time is right from a strategic point of view, to start to make the most of that and start to present that their businesses as businesses that have shown that just choosing us enables them to be able to run a viable business themselves, and therefore shows real social proof to other agents who make different choices that they should come to us. And ultimately, the aim for me would be to have more agents choose On the Market as their only portal choice. I've referred a couple of times to Glanty, and Glanty owns and runs a platform called TechLet. And TechLet is effectively an automation platform that looks after the process, everything from when a tenant has agreed a let to when the tenant moves in. What does that actually mean? Well, once a letter's been agreed, there are many things that need to happen in that workflow before the tenant can move in. They need to sign the terms, they need to pay their deposit, there needs to be the deposit protection service, there needs to be a clean of the property, they need to work about property management, and then the check-in and move-in. And TechLet aims to automate and almost gamify some of those parts of the workflow, encouraging the tenant to interact in a timely manner, helping the agent move through that workflow. And when we looked at the business, Clive and I spent a lot of time assessing and analysing it, and I, as an ex-agent, have been and seen many of the parts of this functionality. And we really like the idea that some of those elements are automated. They will never replace the human contact between agent and consumer, but it helps to automate, which has cost efficiencies, time efficiencies, and we believe that that model in the TechLet platform can be replicated for other parts of the transaction cycle too. And ultimately, what we will look to do is develop our own end-to-end customer relationship management platform for sales and lettings that enables our estate agent customers and potentially house builders too to manage their properties, upload their properties to the website, engage with consumers, track those consumer interactions, and importantly, manage the transaction flow for lettings as it does currently, and potentially for sales as well in the future. And we believe that that is a significant opportunity, as it will benefit our agents, it'll benefit our agents' customers, but of course it'll benefit to our consumers too. And this is just the start of what is a very broad property ecosystem. And I'm sure all of you on this call will have experienced some parts of this ecosystem, and you will all be aware that there are many things that go on and many businesses that are involved in the property cycle that's much more than just search for a property and buy or let it. There are many things that happen before, during, and crucially after a transaction. And we believe the long-term opportunity for us is to develop ways to help and support our agents with those other parts of the transaction cycle too. Everything from helping them conduct the viewings on the property, arranging the photographs, arranging the floor plans, getting the professional photography done, the EPC, through to the other end of the scale, which is what happens after the transaction, and helping potentially even a new owner or tenant when they are in the property. So we believe that that will have value to our customers, and it will have value to our consumers as well. I touched on commercial partnerships, and commercial partnerships for us really means building these relationships with what we are referring to as best-in-class product and services providers. These are companies that have some technology that could benefit our agents and consumers, or indeed our larger scale businesses that have an output or an access to a market that will enable us to get our product and proposition to more customers and consumers. And we're very pleased that in the short space of time, we've already been able to announce 3 commercial partnerships, which are on the screen here, and there will be more coming. Just to be clear, I don't envisage there to be thousands of commercial partnerships, but what's really important to us as a business to actively seek to help our estate agents, letting agents, and house builders. And therefore, we believe we should be building these partnerships to give them more value to their product, service, and functionality, give more value to us as a portal that's providing them with an additional suite of services, and potentially there'll be revenue generation opportunities for both the agent and for the business in Onthemarket. And 3 examples are here. We've managed to secure a relationship with Reach. This covers marketing and communication effectively, and it enables us with our relationship with Reach to utilize Reach's scale as the largest commercial media news provider in the UK. They touch 80% of the UK population every day and have major press titles such as The Express and The Mirror, and regional titles such as Manchester Evening News. But it's not just about the print that we're really interested in. We're also interested in their digital coverage. And they have many small digital hyper-local sites that are focused on a local community and a local area. And one of the key elements of feedback that we've received from agents is they want support locally, hyper-local support in their town, as well as the national coverage we can provide with our conventional marketing strategies. They're looking for local support too, and Reach will enable us to do that. We've also agreed a commercial partnership with award-winning lettings provider Canopy. And Canopy allows tenants to become effectively rent ready. So certain elements of the rental process, such as anti-money laundering checks, affordability checks in the same way as a mortgage calculator would work, and making sure that they are in the right position before they even contact the agent. So that gives them a head start. It shows that they are in a good position. They can afford the property they're inquiring about, and they've already done some of the pre-flight checks before they even interact with the agent in the first place. That benefits our consumers because it helps them to be rent ready, but it also crucially benefits the agents, particularly now when agents are incredibly busy. This enables them to see which tenants are most likely to be suitable for a particular property. So there is a benefit for both the tenant, therefore the consumer, and for the agent too. And last but not least, we've been very pleased to agree a commercial partnership with Sprift. Sprift are a leading market and data intelligence provider, and they provide lots of information. In addition to standard information you can get about a property, they provide an additional tier of information which has a benefit to our agents and a benefit to our consumers. Why does it benefit agents? Well, if you have all the information about a property, its location, its full title plan, any issues around the property, all of the properties similar to it that have transacted or sold in that recent time, and you have more information than you would do as a standard consumer, then you will be in a better position to win an instruction, to gain the trust of your customer, and to be able to secure that listing. And for consumers, as I mentioned earlier, there's very much a focus on let's provide more information. And we have agreed with that strategy, and we believe firmly that we are duty bound to be able to provide as much information as we can to help the consumer make their decision. Why is it that it has to wait 3 to 4 weeks to find out some of the key information that could have been provided up front? And we firmly agree with the government's stance on this, and therefore we believe it's our duty to help to provide that more information to our consumers in the future. They're just 3 examples. There are more that are on the horizon, but hopefully that gives you a picture of the types of relationships we are building to add more value to our estate agents, letting agents, and house builders. And let's not forget, onthemarket.com, as we said earlier, everything will focus from the site, and our core proposition will not change. It's still going to remain a full end-to-end listing service, but we already have a USP. We already have a unique selling point, and that is our new and exclusive proposition. And our agents choose to support us and feature thousands of new properties every month, 24 hours or more before Rightmove or Zoopla. Some agents actually support us for 48, 72 hours or even longer. And we massively value the agents who choose to do this. But this gives us a competitive edge, and the edge is to the consumer. If you are serious about your property search and you want to find something and you want to get the best start to finding a property, then you must come to On the Market as one of your choice of platforms, because you will see properties that are listed 24 hours or more before other portals in the marketplace. And we'll be looking to continue to develop that proposition and perhaps refresh it and make it even more engaging for consumers in the future. We're also carrying out some internal functionality. Some of this is designed to increase functionality for agents, and some of this is designed to increase functionality for our consumers. And there's just 4 examples on the screen, and I'll just summarize all of them very quickly. Ask the Agents, which we have launched in the last few weeks, is an engagement tool. It's designed to encourage consumers to engage with agents about properties that may come to the market but aren't actually listed for sale just yet. We understand what consumers have told us. Consumers from our surveys and agents from our surveys have told us that they are looking for ways to engage and interact with each other. So this provides exactly that. And particularly in this market, this can be very valuable when the most serious of buyers who are thinking of transacting would want to be able to contact an agent about a property that might not be on the market just yet. Our reserve buyers list will feature a list of backup buyers to our agents should the worst happen and a property fall through. Up until now, we would always rely on, I can say this as an ex-agent, always rely on our existing database, people who have called in the past. But this will enable new purchasers who maybe wouldn't have interacted with the agent otherwise because they will have seen the property is under offer. This enables them to interact, and then the agent can build a list. And sadly, if the property does fall through, that ready compiled list will be ready for them to engage with those consumers too. We have a sold nearby feature that we've just launched also, and that's a very clear and simple proposition tool. It's demonstrating to buyers and buyers, sellers, tenants and landlords, and potential sellers and potential landlords, that an agent has sold or let properties in a particular area at a particular value, and it shows that social proof and demonstrates that they may be the right agent for them. And last but not least, our automated valuation tool, which has been a significant advantage for us in being able to build new numbers of valuations to our agents. Both of the products on the bottom of the slide are paid products and generate additional incremental revenue. But of course, the main benefit is so that agents can win more instructions, get opportunity to win more instructions and engage with more consumers. We mentioned new homes opportunities, and there is significant growth since that part of the business started in September 2019 to develop our new homes relationships. We already have the majority of the top PLC house builders, Barratt, Taylor Wimpey, Persimmon and others. And we are continuing to build those relationships. But crucially, there are so many other house builders in the SME sector, and that shows great opportunity for us in the future. And we're continuing to develop our product and service suite for them, for house builders large and small. And as we develop, we see considerable growth opportunities in this core element of our business too. A final word on our brand and marketing. I won't share any details this evening, but we are looking at a brand and marketing refresh. The core brand has remained the same since the launch of the business. And we think that now's the perfect time, as we're starting to launch new products, services, functionality geared towards consumers and agents. We believe now is the right time to refresh the brand and make it even more engaging and attract more people's attention. And crucially, try and increase the stickiness of the website, increase people's transaction times when they come onto the site and stay on the site for longer periods than they would have done otherwise. And we believe there's opportunity to do that with a brand refresh. And our outlook for this financial year, well, we've had a very positive start to full year 22. We're currently trading in line with our expectations, and obviously strong housing market conditions have continued since the start of the year. And as such, we would expect, as Clive alluded to earlier, our ARPA, average revenue per advertiser, to continue to increase as we continue to unwind those free contracts into rate-paying contracts. We believe that there's opportunity there and significant opportunity with new homes as well. We are in a strong cash position, as we saw in the earlier slides, and we're now starting to build our first round of exciting portal developments, focusing on those new functionality, as we saw earlier, and of course our commercial partnerships to enhance our product offering and show ever-increasing levels to our estate agent customers. And of course, we massively value them, not just because of the way we have our ownership structure, but also because our aims are aligned. We want them to be successful. We are listening to them in ways that we've never done before, and we are continuing to engage with them so that we provide a best-in-class suite of products and services that work for them. As a final summary, we have demonstrated and are demonstrating that we are becoming more than just a portal, more than just onthemarket.com. We are starting to build a differentiated and technology-enabled property business with a whole suite of products and services. We've got strong fundamental estate agent customer support, and many of those contracts are in the long term going to 2023 and beyond. And we're seeing from the slides earlier record levels of engagement. More visitors are coming to our site than ever before. More leads are being generated than ever before. Our consumer awareness is up 10% year on year. So we believe as a board we have incredibly strong foundations with which to move to this very exciting next stage of our growth. So to summarize, this is a great business. I'm hugely excited about the future. I'm massively enthusiastic about the brand and the business. I have to say thank you to the board, and particularly to Clive, who did some great work in the interim before my appointment, and largely the results that you've seen in the last financial year has been down to them. But I'm really excited about the future, and I believe we have a really strong and clear and differentiated growth strategy for the future. And there's still significant market opportunity, as you can see, both in residential and in our new homes departments too. If you'd like to get in touch with us, of course you can. The details are on the screen. You can either email us, you can follow us on Twitter, either on OTM PLC or at Jason Tebb if you want to follow me. And we are available on LinkedIn and Facebook too. All those channels are live and will be available to you. And of course, if you wanted to see our progress, please feel free to follow. And on that, I will end, and we will start to take some questions. But thank you very much for your time. I look forward to starting to look through the questions now. Thank you.
Jason, Clive, thank you very much indeed for the presentation. As Jason said, ladies and gentlemen, do please continue to submit your questions using the Q&A tab situated on the right-hand corner of your screen. But just while the company take a few moments to review those investor questions submitted already, I'd like to remind you the recording of the presentation, along with a copy of the slides and the published Q&A, can be accessed via our investor dashboard on the Investor Meet Company platform. I'd also like to remind you that your feedback is important to the company, and immediately after the presentation is ended, you'll be redirected for the opportunity to provide feedback in order that the team can better understand your views and expectations. We've obviously had a number of questions come through, guys. Jason, perhaps if I could hand over to you just to click on that Q&A tab, and if I may just ask you to read out the question where appropriate to do so and give your response between yourself and Clive, that'll be great.
Of course, thank you. Thank you, Paul. So question one has come from Simon C. Thank you, Simon, for your question. And the question is, what leverage do you have to increase the revenue from the client base through additional services, and how do you see that growing? Well, I'll start if you like, and then maybe Clive can add. I think we've seen from the presentation there are opportunities. There are opportunities to increase our revenue from our existing customer base, but by offering different and new products, services, and functionality. And our aim is to increase the value that agents perceive in our products. And therefore, we do believe there is considerable opportunity there. And as you will have seen from the presentation, the focus on the portal part of the business is still very much laser focused. We're not saying by any means that the strategy means we're going to diversify away from that. Our core business and our portal is still going to be key, and the growth strategies that are focused on that portal and the revenue that is generated from it will still be a fundamental part of our business moving forward. I don't know if you wanted to add anything to that, Clive?
No, I think I agree with entirely. There's not much to add. It's it's about value, and some of that value will be supporting the existing fees and listing fees, but some of that value will be in new products and services and additional revenues. So.
Thank you, Clive. Next question from Alexis P. Alexis, thank you very much for your question. Will marketing spend now be restored to previous levels? Clive, please.
Yeah, so we've made clear in our results release that we will now be going back to what we call normal marketing spend. That isn't a number that we've published, but if you look at how we've gone year on year since admission to AIM, in the year to Jan 19, we spent 15 million. We spent 12 million in the year to Jan 20, still pre-COVID. What we found is that our marketing expenditure is far more effective now because of the scale that we've grown and because we've got a much more engaged consumer audience. Many more people have downloaded the app. Many people have signed up for property email alerts and so forth. So actually we get a far more effective use of our marketing expenditure, and hence you saw it coming off. Now, it wouldn't have come off as far as 5.9 million had it not been for COVID and the actions we took. So I think you can look to pre-COVID levels and assume, we will get an effective spend out of it. It may not be exactly that number, but those sorts of amounts we think are probably the right amounts to be spending. I come back again to the point I think both Jason and I made as well. I think we have shown in the last year that we can match our expenditure, particularly our marketing expenditure, to our revenue growth. So we've got some ability to control the relative revenue growth versus the costs we're incurring, while still keeping that good consumer engagement with active property seekers.
Thank you, Clive. Lots of questions to go through. Might not get time for everyone, but I'll go through as many as we can. A question from Niall D. Thank you, Niall. The question is around that he's noticed that in the last period to the period before, there was a small reduction in numbers of branches lost. And before the effect of any new branches added, of these, what is the split between paying branches and discounted fee branches? I think we had it in the slide, but maybe we'll summarize again. Clive.
Yeah, I was going to say, so Niall, I don't actually have on my fingertips. There is always churn. So there are always agencies going on and off portals at different times. Some agencies may go off all portals for a bit and then come back on, depending on the business they're doing and the levels. Other agencies go in and out of business. So there's always a level of churn in the industry. I don't have all the details of gross this and who was which. All I can say is the majority, by far the biggest impact for us, was the removal of those people on free contracts, long-term free contracts, who chose not to go immediately to a paying contract. We'll still engage with them. We'd still like to get them back. We still think we're increasingly offering better value. But in the short term, they've chosen not to go straight to a paying contract, and we've removed them. And that's the big difference between the two things. But there are other factors behind it that are there every year.
Thank you, Clive. Next question from Peter. Admirable though it is it wise to return funds received during COVID to the government, bearing in mind pending corporate tax rises to fund such financial assistance? Either of us could say that, but I'll defer to you, Clive.
No, that's fine. Look, I mean, I think opinions may differ on this. Different people see it different ways. I think our view was that the furlough scheme is there to protect the economy as a whole. For those people who need it most, who have been hit hardest by the implications of COVID. And we felt that we're in a position where we didn't need that. And, as you know, the furlough scheme is still ongoing. So the ability of the government to support areas of the economy that have been harder hit is probably still a good thing in our view. Look, I take the view, but that's what we chose. We thought it was the right thing to do. I mean, it's a slight aside, but in terms of corporate taxes and so on, we do have quite a few losses to carry forward that will help us, in terms of our tax bill for a few years to come.
Thanks, Clive. I wouldn't add anything to that. A question from Andy. Andy, thank you for your question. Is there anything that's missing in your kit bag to execute on the diversified revenue plan? If so, will you look to create organically or quite? It's a good question, actually. So the kit bag, which really is the 4 pillars, is key to us because we have spoken to hundreds of agents and customers and consumers too. And we believe that those 4 pillars fulfill the majority of the key elements of deliverables and differentiation that we will need to provide to our customers. But we're not ruling out that there will always be things that will change. This market changes very quickly. Technology changes incredibly quickly. And every week, Clive and I get to see many new elements of technology. And we believe that our strategy moving forward could be part of a continuation of development of our own internal work and our own internal development work that you've seen through the release of some of the products that were in the presentation. That could very much and will be a part of what we do in the future. There will also be some more commercial partnerships with either new businesses or existing businesses if we see some angle. And we wouldn't rule out necessarily some M&A activity, but I think, and maybe Clive will have a view, but I think we'd have to be pretty extraordinary to move us away from our strategy that we have in place already.
Yeah, I think I'd probably go slightly stronger, which is to say we undoubtedly will be doing things organically to add to our suite of products. And, we've got a big IT dev team. They're working away flat out at the moment, and that will continue. So definitely you'll see further products and services, further differentiation of our offering, and that will undoubtedly be through organic as a part of it. Will there be M&A as well? We do see quite a lot of stuff. We are bluntly one of, 3 large players that have distribution into the agency market in any meaningful way. And obviously we have significant levels of consumer traffic. So those are attractive to, new prop tech businesses that struggle to get, that have the funds and wherewithal to get, market penetration. But at the same time for us, it would have to be both a good opportunity that fitted within our strategy, but also at a sensible value. We're not going to be out there just throwing money or shares over things that are on silly valuations. But if the right value, we thought it made sense for our shareholders and other stakeholders, then we'd consider things.
Thank you. Ryan M asked, do you see consolidation of the portals and would you see the scope going forward for sellers to directly list their property? So I'll cover off point 2. No is the answer, very bluntly and frankly. We don't see a future for sellers to directly list their property. We are majority owned by agents. I am an ex-agent. We are aligned with agents and we will support them. And I don't believe that there will ever be a scenario where, from our perspective, we do anything other than support our estate agents, letting agents and house builders. And that alignment has been intrinsic to our growth to date and will be intrinsic going forward in our growth. On the point of your first point, consolidation, I can't comment on that. I don't know what the future will hold. All I do know is we are focusing very heavily on differentiation. We want to make our proposition different from the other players in the marketplace. I think it's now time to own our own lane, to step out of the shadows and to really forge our own path and stand on our own and really make sure that we are differentiating to the benefit of our customers and our consumers too. What happens in the future, sadly, none of us will know. And we're running out of time. I think we've got time for one more question, if that's okay. Niall D, thank you, Niall, for your question. Do you see future growth in branch numbers or will they remain broadly flat? Should we pick up, Clive, do you want to pick up the
I think for
organic
us,
growth?
In the short term, we see the main opportunity is the current customer base we've got, which, as you saw earlier through the presentation, is now mainly paying, but certainly a reasonable chunk of that is paying on discounted rates rather than full tariff. And we still have the opportunity for people to join on full tariff as shareholders. What we've got to do, of course, is demonstrate and increasingly add value to them through what we're offering, so that they recognise that actually there is, value to be had from staying with us on full tariff contracts. So I think that is our primary aim. Now, actually, of course, if we're increasing value to customers, for anyone who's not with us to join us would also benefit from that increased value. So clearly, we hope that by doing that, we will also look to encourage new agents to join us in the future. But in the first instance, I think there's a sizable opportunity for revenue growth through working with those who are on us and paying something, rather than focusing all our efforts on those people who aren't even with us at the moment. And we'd rather, anyone who's paying us something is a customer and is valued, and we want to increase our value to them, and we want to get them to where they see us as fair at our full rate.
Thank you, Clive.
Guys, thank you very much indeed. Jason, Clive, thank you. I think you've addressed all the questions you can from investors. And of course, if there are any further questions that do come through, the company will have the opportunity to review those questions, and we'll publish responses back out on the Investor Meet Company platform. Jason, perhaps I could just ask you for a final few words just to wrap up before we redirect the investors to give you some feedback, please.
Of course, thank you very much. And thanks so much, ladies and gentlemen, for your time, whether you are an investor or potential investor. We very much appreciate listening to our presentation. I think we've demonstrated that the business, the core business, is continuing to grow, is sustainable, and that puts us in a fantastic position for the future. And we've developed a strategy based on our 4 core pillars to differentiate our proposition and to be able to offer increasing levels of value to our customers, which is our estate agents, letting agents, and house builders. And I think from a perspective of where we see the future, we want to continue to increase those levels of value, increase therefore the levels of leads that are coming from consumers to them, and really start to differentiate and own our own lane. Quick word to say thank you yet again to the management team, all the staff at Onthemarket, and particularly to Clive, who was so instrumental in the results from last year. Thank you all for your time. We are available on the social channels if you wish to follow us or find out more information. And we all look forward to speaking to you again very soon. Thanks very much for your time.
Jason, thank you. Jason, Clive, thank you so much for updating investors today. Can I please ask investors not to close this session, as you'll be automatically redirected for the opportunity to provide your feedback in order that the team can better understand your views and expectations. This will only take a few minutes to do and will be greatly valued by the company. On behalf of the management team of Onthemarket Plc, we'd like to thank you for attending today. That concludes today's presentation.